Hello, friends and family, friends of Philadelphia. So you're looking to buy. There are going to be three things that are going to affect your payment the most. The rate, of course, right? But two other things that no one maybe doesn't really think about is the taxes. Now, we recently had a tax assessment, a reassessment in the city of Philadelphia, also outside of the city, in some of the counties. So depending on what the taxes are, that's going to affect your payment. The lower the taxes, the more house you can buy. The higher the taxes, the less house you can buy. The third thing is going to be the amount of insurance you have. Now, you're not going to save drastic amounts of money in this wheelhouse, but it is a certain consideration. So check out the other videos here. We're going to go in depth a little bit on each one of these three things. Good luck out there. There are rates that adjust after 5 years or 7 or 10 or 1, and they're based on prime. So what is the going rate out there? They're going to be prime plus something. But an adjustable rate may not adjust for a few years. You may be happy with that. I'm not saying you should do it, but if that works for you and the rate won't adjust guaranteed for 5 years, then do it. No one knows what the rates are going to be in 5 years. They could be double, triple what they are, or they could be half of what they are. At any point, you can refinance. But if you're not comfortable not knowing what's going to happen in year 6 or year 8 or year 10 or whatever it might be, then don't do it. But an adjustable rate mortgage is an excellent way to at least to buy down some debt or to pay off some debt and then refinance at a later time, or you take a chance and see where it's at. Some companies will allow the rate to continue. You have to read the fine print. All right, so the interest rate is probably the most popular, the most talked about, the most known, the most chances you have to fix your payment. So there are many things you can do here. We want to shop around for the lowest rate. The best way to do that is to use a mortgage broker. Now, your local bank might have the best rates, great, or credit unions work very well. But if you use a mortgage broker, they can shop to hundreds of banks with hundreds of programs to get you the lowest rate. Plus, they get paid for performance. Most lending professionals do, but a broker will literally get paid for performance. A smaller brokerage is best because they have less red tape. So that's one way to get your rate lowered.